Welcome everybody to another weekly market update. It's Sunday after the market closed on the 13th of October, making this the 15th of October. Every week this is where we look at the big picture. What's the stock market doing? What kind of market is it in? Is it going up? Is it going down? And we look at the short-term trend to see how it's going to affect your individual trades. Stock market affects everything. House values, the economy, everything is. This is like a crystal ball looking into all those things. And your retirement funds, all that money you're paying into banks and here and there, into pensions and whatever, it all goes to the stock market. So it's very important to know where it's going and so on. So we're looking at the S&P 500 here, which is kind of like a benchmark for the whole planet. Here's the bottom down here, across from 2015 all the way up. This is years going up here, and the price going up and down there. Each little vertical bar here is a week of action, up or down, and these moving averages here kind of smooth it out for us to see the kind of the average direction of things based on the last 40 weeks, and the red one here, the last 70 weeks. So this is an extremely aggressive uptrend. This is a bull market, no question about it, a very powerful one. And that's something that my system that I teach at my seminars and so on predicted back last November, and it hasn't stopped going up since, and it's not getting you out of that yet. So the trend continues upwards. We're not going to fight that trend. Definitely going to go short this market. We're going to ride with it. But this is now getting on for a year without even a healthy correction. 1, 2. It's getting to be a crowded trade now, and it's kind of a self-fulfilling prophecy. Here's what's happening. As the stock market keeps going up, the so-called tracker funds, the funds that just basically just follow the market, have been doing well. So more money goes into the tracker funds, so the tracker funds go up, and then so they're doing well, so more money goes into the tracker funds, and that's really what's been going on here. Money has been like flowing into the stock market because everyone's desperately searching for a return in a low interest environment, and the stock market has been delivering. And it's self-fulfilling because more money goes in, it makes the market go up. More money goes in, the market goes up. An interesting thing we also look at is the VIX. This is a volatility index. The lower it is, the more complacent the market is, and the higher it is, the more fearful the market is. Something very interesting about the VIX is, here it is on the weekly chart, which is more, going back over years, and you can see just how low it is currently. Since I was reading some interesting research, since 1990, so in the last 27 years, the VIX has closed below 10 around 40 times, and 30 of those have been in this year alone. So just think about that. In the last 27 years, 40 times the VIX closed below 10, in other words, very complacent, and 30 of those have been in this year alone. So something is definitely off. As I say, I'm not going to fight the trend. I'm going to ride the trend. I've been making money with the trend. I'll continue to do so. But I'm just saying, and there's so many people now who actually, that what they do is they short the VIX. And that's been as you can see, that's been a great trade. But so many people are now on the short side of the VIX. It's vulnerable to what's called a short squeeze, which could send the thing higher. As more and more people with their fat pockets full of gains from the stock market seek protection, start to buy, get more fearful to lock things in, that can become a self-fulfilling prophecy as well, and just get a violent correction going to the downside. So now a correction would be healthy, but it doesn't want to do that. Let's look at the daily chart here. This is day-to-day action here. It's a bit more short trend, which is more for traders as well, and what direction of things are going. I'm not seeing any signs much. So I had a distribution day there, not much signs of danger though otherwise, short term. And even in the week ahead, I'm not saying anything's going to happen in the week ahead. I'm talking just more big picture now. This is getting sillier and sillier, and to be aware. Even by this trend though, this is the 50-day average, and it's just way up here in the clouds, riding half of its 50-day, never mind its 200-day. A healthy correction, by the way, but it came down to somewhere around this region here in the 200-day area around here, and then just bounced on. That would be healthy. We haven't seen that yet. So I would get, if this market gets, if S&P 500 SPX, let's say, is our benchmark guide, start to get wary if this gets below the 50-day moving average. And it's riding so high above it right now that would already represent a significant drop. So start to be be careful if you see that. Otherwise, just enjoy the ride, because until proven otherwise, all said and done, this is the big bull market, and the short-term trend, the long-term trend is up, and the short-term trend is up. Just keep an eye on it, and I'll speak to you next time.